Hello, listeners. Happy AppleVision pre-order day, which I've happily secured my unit at 5 a.m. in the morning and is tired as a result. This is Ben Bajarin speaking.
Greetings, Internet. This is Jay Goldberg speaking. I am well rested because I did not wake up at 5 in the morning to get a Vision Pro. I do have a friend of mine who has a what his daughter works at Apple
uh,
and on the East Coast, and she got him on the list.
yeah.
And he he said, "I'm so excited about the Vision Pro that when I get it, give me 24 hours and then you can play with it."
There you go.
So
Yes.
I've got mine now too.
Perfect. Well, in the coming weeks, we will discuss that. But for now, we've got some happenings. Regular listeners know that we like to talk about TSMC's earnings because they again send us a bit of a signal. But there are some other parallel and complementary news that came up that again gives us some sense as to what demand will look like today. And I'm sure many people saw a lot of semiconductor stocks were very high. NVIDIA hit all-time highs. ARM was either hit it or very close to it. AMD up, lots of names sort of up. A big one who we'll talk about, Supermicro, which I think is again kind of on the back of the indicators or the signals that we're looking for. But let's start with TSMC. They had a really strong guide. Um, they had obviously strong earnings from an overall standpoint, but their growth forecast was they're saying low to mid 20% in the U.S. And another big sort of note, just in terms of what they were seeing in terms of diversity now of moving to the leading edge. And I noted one of the other interesting remarks was they're seeing a higher uptick in engagement to N2 compared to N3 from both HPC and smartphones at a similar stage, which I thought was kind of positive, which actually somewhat indicative of a similar cycle for 7 nanometer, which was one of their best categories as they were getting to leadership. But overall, it sounded pretty positive, and I think their guide was what everybody said. Yep, it's going to be one of those healthy years because they're expecting solid growth in 2020.
So you know how like last week when I was talking about CES and I was complaining that there wasn't enough AI at CES,
Yeah,
the intervening week has made up for it because it's been
a
all
lot of
AI
AI.
all week.
Yeah,
Uh, most of a lot of their commentary, most of the questions, the analyst questions that went to TSMC on their call, and most of the follow up coverage has talked about AI. Um, it's it's important. It's important to their business. It's probably we're in a little bit of a trap in how we're talking about AI, but I
right.
think for a lot of TSMC's commentary, when they talk about AI and this big demand they see for AI, that's I think we can read that as code for NVIDIA.
Yes.
I think I've
I
just saved everybody an hour reading the transcript. NVIDIA is doing really well.
Yes, NVIDIA is doing very well. They, when you look at some of the additional commentary, I mean, they came out and again wanted to emphasize kind of exactly what you said, that they're well positioned for AI, that they've got every leader, quote unquote leader, right? Because they define that leader, but every leader in AI is engaging with them, which generally would be true, right? Um, and I think what kind of goes somewhat, I don't know, under the radar is, we know that Intel is continuing to put more of their compute tiles to TSMC, and but what's intriguing to me here, because I don't honestly know if I agree with this, it feels to me like everybody's saying, if I want to make the best AI processors, I need to move to the leading edge, and I think that's true in some cases, but I don't know if that's true across the board. But the fundamental point that I think is interesting is, we talked about this last week. I'm imagining we're going to continue to talk about it throughout this year. Is we're still not seeing a re-architect of design with AI first silicon yet. It's still retrofitted outside of a couple of examples, which maybe we'll talk to at some point. We had a meeting at CES with Grok. they're obviously building something that's very specific to AI in terms of inference. Cerebrus obviously building some silicon very specific to training. So those architectures are thoughtfully designed with AI first versus let's just take what I did for a mobile or a desktop or a cloud GPU and make it capable via software. Now again, will TSMC benefit from that when people start saying, let's re-architect things for the AI first era? Maybe, but I'm just not sure I completely buy every point about, well, being on the leading edge means I'm the best in AI silicon.
Yeah, let's tease that apart, because I think first and foremost, if you're designing a chip where you need the utmost performance, you're going to design that on the leading edge. And where else are you going to go?
Yeah,
right?
You're going to go TSMC, right?
You're going to go TSMC. So when TSMC says all the leading AI companies are coming to us, well, okay, you could take out the word AI and just say all the leading semiconductor designers, right?
Right.
But to your bigger point about AI first silicon, I've been working on a piece. I probably come out next week where I'm trying to sort of sift through the AI market and put some structure around it and how we think about it, right? Because I really see it as sort of three buckets, right? There's the bucket of AI wash, which is just the toothbrushes and backpacks with AI in it. Like, we can take those out. Then there's all kinds of companies that are, what you're doing is what you call retrofitting AI on top of existing products and architectures, and then there's new AI first things. And I think that middle bucket is where most everybody is looking. I mean, to some degree, even NVIDIA is still coming from that camp. And even within that, I think there's two sides of that. I think this is the conclusion I'm coming to, is that a lot of AI, possibly the vast bulk of what we call AI, the benefits from that are going to accrue into systems like that aren't AI first, that are just like the Apple A series, right? That's had AI neural processors in it for years now. It has pretty clearly made photo, video, image processing better on the iPhone, maybe in ways we don't fully appreciate it daily, but it's there. It's been there for a long time. I think that's a lot of the benefits from, I won't call it AI, we'll call it machine learning, are going to accrue in those kinds of ways. People are taking what they're already doing, and because of the advances in machine learning, they can do those things more efficiently. It's an economic argument more than a compute or an innovation thing. And I think that's important and understated, right? Lots of people are talking about AI because they're able to do existing things faster, more efficiently. And that's great. That's great for NVIDIA because they have such a lead in doing that kind of compute. The problem I think we're running into is there are a lot of companies that are sort of using that as cover for doing existing things without really thinking through them clearly. And here I'm really thinking of AI and Intel and a couple other companies where they're starting to launch AI products, what they're trying to claim are AI accelerators. If you try to get under the hood, it's not clear that they're really anything new there. Right. And this is a problem you and I have talked about a lot, is try to get some understanding from either of those companies about the architecture of their AI accelerators, their NPUs. And they are not particularly forthcoming with any details. And my very strong suspicion is they don't want to talk about the architecture of their AI accelerators because they're really just sort of warmed over GPU, CPU cores. And there's not a lot of differentiation there.
Yeah.
And so they're not going to talk about it. And I think that's a big problem.
What did you get a sense of? Because I had some people point this out, and I'm not doubting TSMC is going to have a strong year, but a number of the analysts that I was talking to, in back channel things, pointed out that they did guide last year to a bit of growth, and it didn't tend to be as optimistic as they said. So I think that was hinting at a suggestion that TSMC's guidance, your guidance, might not always be the most predictable. Again, I'm not saying they're not going to grow, but within that, there's some assumptions that smartphones see a cycle. Like, I already see these things being labeled AI smartphones. We've talked about AI PCs, that there's some, I think some of that does depend on that, because again, it's not like we're talking 50 million or 200 million units of AI data center silicon, right? You need that scale at client. So again, I'm not saying they're not growing, but I took that as a point to like, sometimes they're not always, as predictable when it comes to their growth estimate.
Well, no company is, but here's a thought experiment. Imagine if NVIDIA didn't exist,
Mm-hmm.
right? And it didn't exist last year, it just disappeared off the face of the planet. TSMC's numbers would be
Yeah,
not great
not great.
because because consumer was weak last year,
Yep.
right? PC and smartphone were pretty bad. And
Yep.
I haven't done the math, but I'm going to next week. I'm going to, it's a note I just thought of. I'm going to look at that and try and strip out NVIDIA. I bet you most of TSMC's growth last year, came from NVIDIA's crazy year, and I think that's sobering. And so, yes, we all know they're strong secular trends, more semis and everything, but that's a long term
Yeah.
part of the process. I think that the near term excitement is very much NVIDIA centric, and the AI stuff from everyone else is sort of coming on later. And I think what we're going to see is a lot of the other companies' AI stuff, at least certainly this year, it's going to be, like I said, it's going to be it's going to be SoCs with a little bit of AI cores sprinkled in,
Right.
and that
I mean, no,
and that's going to be invisible to NVIDIA's numbers. Like, how does NVIDIA
right.
describe that kind of chip? It's not an AI chip. It's just a
Right.
CPU.
I mean, there's clearly no doubt that they're going to see growth from this demand. I mean, every number that you see from server side AI companies making boxes just continue to say that they're seeing a year of wait times to get GPUs from NVIDIA. So clearly the demand is there. It looks like wafer costs are again going to go up. I saw an analysis of the leading edge, the predominant leading edge customer for TSMC, who starts with an A, seeing their wafer costs increase, essentially justifying, or not justifying, but validating that cost per compute node plus transistor is going up. So you are paying more at that edge. So they're going to, as the leading edge sees strength, and as you start to see, right, 5 nanometer took a big jump in terms of revenue, 3 is starting to pop up in a major way. Just by nature of those transitions, they benefit from that financially, right? I think the question comes back to how much scale is needed to hit said 20% number, and then how important is that on big volumes like PCs and smartphones, or is there enough dynamics there that 15 to 20% is probably reasonable no matter what, just on the back of business as usual and enough companies needing to supply wafers from TSMC.
Yeah. Again, I think cyclically the industry is in a better shape than it was last year. PCs and smartphones will do okay with or without AI. That's going to be a big part of their growth for 2024. And then the AI stuff is like I said, it's NVIDIA, and that seems to be still very, very strong.
Yeah.
And like, I used to think NVIDIA would hit an air pocket like Q3 this year, and now I think it's further
Yeah.
out. Like,
I told you. I told you.
yeah, you did.
So here's the other thing I think is interesting, and I want your feedback on this because nobody's pointed this out. But I'm what I'm about to make is a somewhat contrary to a point that way they do things. But I think this is positive. Okay, so the point is the sheer uh, benefit to the leading edge that is Apple to TSMC. So if you just looked at 3 nanometer, they had nearly 100% in 2023. It looks like right now the estimates are north of 60% in 2024, and still a gigantic chunk, if not 60%, of an increased scale in 2025. I'm not talking about 3 nanometer. The question I have is, would it be viewed as a positive? Because I think it would, but that's what I'm testing, that we see a similar chart at 2 nanometer that doesn't have Apple at 100% in year one, meaning that they get diversity at that node. Because I would not that anybody should feel like, nor what I'm saying is that Apple's in jeopardy of losing any scale, but I would view it as healthy that Apple wouldn't be the predominant 100% customer of each leading node transition, because that would signal a couple things. A, they've increased that capacity to meet more than one customer, which has been their challenge throughout the last few node jumps. because we want to see them making investments, and they pointed out in earnings they're making investments to increase capacity. So my point is, I think that would show that they have increased that capacity to support more customers on a node jump day one, not just Apple. And I tend to think that would be a positive from them, from a posture standpoint, from Foundry.
Yeah, I think in general, nobody likes to see too significant customer concentration in any one name, especially if it's Apple, because they're really tough to deal with. But by the same token, if Apple said, you know what, we don't need Moore's law, we're just going to stick with 5 nanometer. We're not going to, right? There's a line of people who would step up and take their place. Right.
So that's my point. Is it a capacity thing? I mean, obviously Apple has preferential treatment. That's what I'm saying. So if by some miracle in 2025, or maybe 2026, whenever 2 nanometers is going to hit, the chart that we see is Apple 80% in first run silicon for that one, and somebody else 20. I think that would be positive, because the last 3 nodes, it's been near 100%.
Yeah, but I worry about customer concentration in other kinds of companies, right? Because usually what you have is you have a high degree of, and again, specifically to Apple, you have 50-60% of revenue going to Apple, and then Apple gives and Apple takes away, and then you lose Apple, and then you have a 60% hole in your revenue number. That's not going to happen here. They're going to have NVIDIA and AMD step up. But it is interesting to think of in the context of, there are reports this week that the Arizona plant for TSMC is delayed pretty significantly. So I think it's the second phase. The first phase I think is still on schedule, but the second phase is getting delayed by basically a generation, basically a node. It's 18 months.
Right.
And so we're going to have continued capacity constraints, and I think their capex number, I know it was above where the street expected, but it still looks a little light to me. It's like, what, $32 billion? It looks a little like the tone of their commentary is that we sort of plateaued in our big spend and we can sort of taper down a little bit. Like, they're still going to spend a lot, but it's not the pace they saw like 2 years ago. But that's weird to me, because I guess that just means they're being very disciplined.
Yeah.
But there's so much demand. It must be very, very tempting to see how much demand they have, and NVIDIA calling them every day asking for more capacity.
Right.
It must be very tempting for them to really just hit the gas and just add, a lot more capacity. And they're not doing that, which I think speaks to their diligence, and also speaks to their recognition that they're not that reliant on NVIDIA. Or Apple. So there's some good discipline taking place there.
Right. But with those delays, I mean, I know the Arizona plants weren't necessarily going to be the bleeding edge, but they were going to have, 4 nanometer and I think progress to more edge. It still only makes the point, relevant to who it's relevant to, that Intel will still be the only real game in town in a U.S. company on U.S. soil with the leading edge at 18A. So the way that plays out is what it is, but I think the delays, again, make for an interesting dynamic there about U.S. soil and leading edge manufacturing.
Yeah, but we still don't have very firm dates from Intel on when customers get 18A.
Right.
That's still. Yeah. I think TSMC will still be pretty meaningfully ahead. Not with Arizona, not in the U.S., but
yes, with leading edge, with the customers, right? Yeah, I just meant U.S. soil. It was a U.S. foundry point. But yeah.
I mean, that opens the very real question. That's something that worries me about Intel is we're very focused on 20A and 18A as is appropriate, because those are the big important nodes. But they got to keep that going. Whatever comes after 18A, 16A is. Yeah. I assume they're planning on it now, but they benefited, right? They're going to get money from the government and from Europeans and from wherever, but what do they do?
And they need customers for that.
Yeah, they're going to need customers for that, and it's going to be tough because customers we still don't have a. I guess they announced they're having an event in February about IFS.
Yeah, end of February.
So I think that's the key date. We'll keep an eye on that to see hopefully they'll announce a customer and we'll get some better sense of the roadmap and the longevity of it. But I guess it's a testament of they've made a lot of progress. We're not worried about them going out of business tomorrow, but now I'm worried about them going out of business in 5 years. So
Yeah. Well, and hint to all of our friendlies at Intel that listen to this, maybe somebody from IFS wants to join our podcast after the Foundry event.
yeah,
But I thought just one last point just on the one I was making about diversity of customers. I thought this was an interesting point from TSMC's commentary that said, as capacity increases, engagement starts much earlier. And so I think they recognize this exactly to your point, and I do think they need to be disciplined. But I think so. Again, I take two things away from this. A, if they could make more wafers this year, they'd make more money. Like they're going to sell every one of those. They aren't sitting on capacity. So point. However, I think they do recognize how much of a capacity shortage we're up against, but I also think that's not an easy problem to solve at the same time. Like, yes, fiscal discipline, getting advanced EUV machines, getting the talent, right? I mean, it's all to say the point I was leading to, which is that nothing changes, in my opinion, that we will still have compute have and have nots, capacity have and have nots, and far, far more demand than we have capacity for really the foreseeable future beyond this year.
yeah. I thought their commentary about the increasing complexities of design were very interesting. They mentioned that at a few points where they say it's just taking customers longer to design chips and longer to bring up. And you know who that reminded me of a lot was ARM, because ARM said the exact same thing.
Right.
When we had Renee on a couple weeks ago, same exact point. Like all these chips are getting much more complicated, and getting that to manufacture is taking a lot longer at these advanced nodes. And it's interesting to hear like these are pretty disparate companies echoing that same point, and how it's an opportunity for both of them. It's a pretty valid opportunity, and I think it makes it harder for everyone who's not them to get involved.
Yep.
Right.
Yeah. Agreed. The other thing I thought was interesting, and this is just a point of leadership by a vendor that we talk about, that we're at a stage in the world of AI where a company like Meta, who announced yesterday that they are open sourcing Llama 3 and that they have procured, I forget the exact number, some insane number, 300 something, whatever, 400 something NVIDIA H100s, that we're at a point in time where just by telling someone how many H100s you have proves that you're in a leadership position. Like, it's whoever's got the most, that means you're going to win. Like, of all the things that could just keep cyclically benefiting this momentum that's seeing NVIDIA, then to the manufacturing of TSMC, then also to the absurd demand that's being now evident by Supermicro, and I know Dell's AI hardware business, these AI servers. Everybody's like, we got a long list of customers that want these things. We're cranking them out as fast as we can. Just speaks to this kind of weird moment that we're in around incredible demand for compute.
So it's I've actually been thinking about this in a slightly different context, right? Because over the last few weeks, there's been this whole thing with Alaska Airlines and the door blowing off the plane.
Right.
And I've been thinking about it because the story is that, here we have Boeing, who has had this series of pretty serious systems malfunctions. And people are saying, or attributing these problems to a big change in culture, right? In the 2000s, they went from being an engineering culture to a finance culture. And that led to this series of really bad decisions. In the context of semis, I think we saw the same thing, right? The 2000s, teens especially, were very much an era of consolidation and focus on gross margin and cash flow, right? This is the Broadcom Avago model, which carried us a long way. But as well as it did for that one company, for Broadcom, it didn't do that good for a lot of other companies. Like take Intel, right? Intel was in 2016, 2015, could have bought a whole bunch of EUV machines, but instead decided to buy back a whole bunch of their stock, goose their share price, pay off their executives. and we've led to this sort of they sacrificed engineering for innovation, and we see where that's left them. Right, it's not a good place, and so I think the advent of what we're calling AI very likely marks a big transition away from the 2010s era of management by cash flow and financial objectives, and a return to focus on innovation, R&D certainly, or like to look at it at a really high level. The last decade was the decade of Hock Tan, and this is going to be the decade of Jensen Huang.
Mm.
Right? And the two best semiconductor CEOs of the last 20 years, maybe ever. And I think it's a right. I mean, Hock has stopped investing in semis. His model has played out in semis.
Right.
And now it's because R&D matters again, and that's Jensen's time.
Yeah. That's a good point. I like that. I like that framing. And you're right, right? Within this context of execution, decision making, smart deployment of capital, um, we're in one of those kind of innovation, lots of capex R&D, maybe make some wild swings. Who understands the market and the semiconductor like engineering, right? Technology again, like these are hard
Right.
technology problems. These
Right.
are scientific engineering problems that we're sort of back to, which is kind of reminiscent, right? I guess of sort of early transistor ramp days, right? As we were getting more complex from simplistic to more sophisticated logic, but at a crazy scale, even more hard, even
Yeah.
more expensive. I mean, we're talking
Yeah.
about, like we said before, packages that are the size of our head. I mean, this is just insane die sizes, right? That
Yeah.
we're on the forefront of seeing.
Right. And I obviously bang the drum a lot that we need more venture investment in semis for exactly this reason, because this is what we need to spark that innovation at the startup level. But I also am very curious to see if any of the big corporates make that same decision and start
Right.
investing heavily, because I've talked to a lot of executives or former executives who lament the lack of investment in R&D at almost all the big chip companies. I can think of a few exceptions, but for the most
Right.
part, I don't feel like anyone's coming up with anything new
Yeah.
outside of NVIDIA, right? While Intel was buying back its stock, NVIDIA was investing in AI. Nobody else seems to be making those kinds of big innovative bets. Maybe a couple in analog, but none of the other really
Yeah.
big ones.
Not the big ones. I mean, I know you said you're going to do a piece on this, and I think we'll probably figure out how to flesh an episode of some of these, startups. Again, we mentioned, Cerebras, Grok's an interesting one. I mean, we're not talking people who've raised billions of dollars yet, but certainly trying something new, not necessarily having to be on the leading edge. There's interesting stuff going on in chip design research from IBM that I wonder if somebody will capitalize and take to market. But there's certainly those opportunities. But it is a incumbent architecture, and I say that specifically, incumbent architecture at the moment, because you're talking CPUs, GPUs, obviously memory, and then now we're starting to think about some of these dedicated AI ASICs, which I don't think are like we started off saying, reinvented or re-architected for AI first. But I think we'll get there at some point. Yeah, is that a big company opportunity? Is that a startup opportunity? Is that, it seems like there might be capital. And today there was some news that Sam Altman is trying to raise many billions of dollars for what they call an AI manufacturing or chip factory, which again, that's very, very hard. Like I read it and I was like, oh yeah, because it only takes money. That's all you got to do is raise enough money from sovereign wealth funds and you can do this. Like, no, it's not that simple. But I do wonder, just the fact that that's coming up and it's been loosely associated that Microsoft could be involved. Maybe there is capital ready to say we need to help catalyze some of these things different than the big companies are. I mean, I think it's plausible.
It's interesting too. On their call, TSMC mentioned that they're investing heavily in 28 nanometer,
Uh,
right? Which I thought was right. I mean, it's a 10-year-old
yeah,
node. They're investing, but one, they see demand at it. Two,
yeah,
it was one of their best nodes.
yeah,
Um, and what they're really talking about is sort of new processes. So I thought that was interesting because one, it shows innovation in some place that we wouldn't have expected it. Like not all semiconductor innovation has to take place at the leading edge,
Right.
and two, makes me a little nervous for global foundries, right? Because
Mm-hmm.
that's kind of global foundries niche is special processes for trailing edge, and oh, your biggest competitors just said they're coming after that. So yeah, that's not good.
Good point. So lastly, just again, I mentioned it, but I think it's worth just sort of talking about, Supermicro pre-announcing. I'll let you talk about sort of the significance of that, just the fact that when you do that, it means something. But again, I think that just speaks to this demand moment. But their stock, I forget what I told you at the beginning of this, was up 35%, something like that, some huge jump, and it was up yesterday too, but up a lot today. Um, but that's newsworthy, I think.
Yeah, so we're recording this on January 19th, and Supermicro pre-announced their results, guiding up for I think the year on what looked like. I mean, I haven't read through all of it yet, but it's pretty strong numbers. And again, a very positive signal. Supermicro is seen as being very, very close to NVIDIA and all the DGX systems and all that.
Yeah, yeah.
And so, or just AI systems in general, they're in a really, really good spot. And so, right. And again, Supermicro is a company that, it's in a very competitive field. It's very labor and capital intensive, not
Mm-hmm.
great margins,
Mm-hmm.
but they're in the sweet spot. I mean, you mentioned Dell's competitive side is doing pretty well there too. It's a really, really good time if you're building systems and people can't get enough of this. So it's interesting that it's already January 19th, so we're 2.5 weeks into the month. So it took them a while to. I mean, I can just imagine their accounting department just adding things up and going, "What? No, that can't be right." They had to triple check the numbers. Like it can't be up that big. Yeah, apparently it is. So,
But I think too, just on this sort of broad point, because we're going to enter an earnings seasons pretty soon. I think a lot of these companies are going to have very similar stories about their growth guides being maybe more bullish for the year than expected. But I also think that they want anything that really helps tell that story at the front part of this year to just show the strong position that they are in competitively to benefit from this uplift that we're going to see in 2024.
yeah, I'm gonna treat all of that with a pretty healthy dose of skepticism. There's gonna be a lot of AI washing this quarter because
For sure.
everybody wants to brush themselves with the magic wand.
The
But
magic
it's
wand.
all right. I think I mean some companies have a credible story here. AMD again doesn't have to boost their guidance by a lot. They just have to show that they're
Right.
competitive and getting some wins there.
Right.
I think the onus will be on Intel to really put some meat to their AI story, and not just in terms of messaging, but in actual customer sales. I think that's
Yeah.
that's that's gonna be challenging for them. I don't expect that this quarter, but hopefully something
Right.
this year.
Right. I think what'll end up happening, at least the conversation that I'll be curious about on this is, you're exactly right. People will do mention AI, et cetera, et cetera, et cetera. I think if I was trying to at one of these companies to push this narrative forward, I would at least want to hint that what I'm hoping you value me at is reasonable within my upside for the year, right? Not blow that out the door. But I think you look at a lot of people who need to also justify some of these valuations. I mean, to your point about AMD, their PE is still, this question still gets asked, like, are they overvalued? I mean, yes, they've got a ton of revenue upside, but manufacturing, how much capacity can they get? How much,
Yeah.
can they even, that's, I think those are all good questions, but that's why I think taking that approach by saying, look, we're well positioned and at least trying to, I guess, justify some of these valuations is going to be part of the strategy, because I think they don't want to be viewed as an untouchable stock because they're just too drastically overvalued.
Well, I think there is it's a trap. I think there is an immense amount of temptation. There's going to be a very, very strong degree of temptation to talk heavily about AI this year because companies, and it's clear like anybody who has an AI story is going to get rewarded by the market.
Right. Right.
And so lots of companies are going to want to talk about it early in the year because of all the news we're seeing right now.
Right.
But you have to be able to deliver on that. And I think a lot. I'm gonna keep an eye out for companies that fall into that trap who talk a big AI story now in January, but can they deliver it in October, November? Like I wouldn't,
Yeah.
that's a very, very risky move unless you have a really high degree of confidence. And I would guess that I put AMD in the camp who's of a company who's not going to fall into that because they have substance to deliver on that. There are a lot of other names out there who probably shouldn't talk too much about AI because they don't really have it, and won't this year. So
Yes.
yeah,
Yes. Well, fun stuff. I'm pretty excited about all the different things we're gonna sift through this year, and with I will just say, like, one of the better points I think you've always made from a financial standpoint to anybody in IR that's listening is the best thing you can be for your investors is predictable with guidance. And so I'm looking very forward to us following people's growth this year and seeing who was predictable with their guidance and maybe holding some people accountable if they've gotten a little too lofty and not hitting their targets. So
yeah. There are a lot of big swing factors, X factors out there. I think that's I'm going to keep an eye on that because there are a lot of things that aren't clear about the consumer, about data center,
yeah,
about non AI data center spend, things like that. Where right now in January you can maybe make a reasonable argument that, oh yeah, we think there's a big range for later in the year. We're going to guide to the high end of that guess, but maybe wait a quarter or two to get a little more like tangible proof that you're on that trajectory because there's some big swings out there possible.
yep, yep. Good stuff. All right. Well, until next time, thanks for listening, everybody. Hope you have had a great weekend and have a great upcoming week, and we'll talk to you later.
Thank you, everybody. Tell your friends.